In the energy quadrant today, crude oil finished today about 1% higher, a three-day rally, but pretty low volume. First day, we've had volume lower than about 490,000 since about July 12th. It really seems like short covering this three-day rally due to that volume. The range was pretty tight, about $1.19, high of about 56.93, low of about 55.74. The reason it seems like short covering is we've had a 9.9% down move since the highs of about a week ago. We've only recovered about 3.5% of that, and again, the volume has been drifting off. EIA is due out tomorrow. Stockpiles are expected to fall. 13 analysts surveyed all expect the average expectation is about a 4.1 million barrel draw. And that would make sense given that we've had about 7 consecutive weeks of refinery utilization above 90. 90 is instant demand. In other words, the refineries are pumping out product. Last week we had a gasoline build. Another gasoline build might be weaker for prices despite a draw that is expected tomorrow. And it looks like there's some strength ahead, at least from a perspective of seasonality. Crude oil has a pretty sideways July. Looking at sort of 20 years of price data, July tends to be kind of a non-event really in terms of overall price movement. We have had that 9.9% drop, as I mentioned, recovering a little bit over 3.5% of that. But going into the end of July and through the month of August, that tends to be sort of the last bastion of hope for the bulls in terms of seasonality only. Now it looks like the Permian is starting to slow in terms of production. OPEC production cuts still going. So if demand sustains, you could see prices going higher past that August date, especially since the late announcement today that a delegation is headed to China to negotiate the U.S.-China trade deal, but don't expect anything anytime soon. Crude oil finishes today up a little over 1%.